I'm Adrian Saville. It's Lawnmower Lockdown Day. To translate from the slang of British bingo halls, the original lawnmower had a 14-inch blade. There you go. Don't tell me that this vlog isn't crammed full of useful information. In a conversation with Joopie Becker yesterday, we were deliberating the three big questions of investing: what to buy, when to buy, and how much to pay for it. If you can answer those three questions, you've solved for investing. However, in recent times, answering those questions has become particularly more challenging for the simple reason that correlations have gone to 1. To translate that market language, correlations going to 1 means that everything is moving in the same direction at the same time. There's nowhere to hide. The nowhere to hide is a result of all of this bad news that is coming to the market all at the same time. And if anything, the bad news is likely to get worse before it gets better, for the simple reason that the world economy is going into its second recession since World War II. The only other time that the world economy has shrunk since World War II was 2009. And second, company earnings are going to fall analysts have got it as a 20% decline. We suspect by the time this global recession is done, earnings could be down as much as 50% if the global financial crisis is any guide. So that news is still to come to us, as economic results will only be reported at the end of next quarter, next 6 months, and companies in 3, 6, 9 months' time will report today's business experiences. However, in this bad news environment, there's some good news and some guidance. So first, 2 pieces of good news. The first piece of good news is, in contrast to global financial crisis, the policy initiatives have been collected, coordinated, and substantial, to the extent that combined policy efforts amount to $5 trillion, and that the stimulus is not only fiscal spending, but also monetary interest rate cuts. The US has led the way with a 1.5% interest rate cut and a $2 trillion stimulus. Added together, this is a coordinated and substantial package that is going to help us find our way through this environment to a better economic outcome. The second piece of good news is we are arguably closer to the end than the start. China led the way in. China is closer to the end of, or to the recovery phase. Asia, rest of Asia, is closer to recovery phase, and the same goes for Europe. We can start to expect news of recovery and improved economic and business outcomes to come from those 3 important regions: China, rest of Asia, and Europe. And then the guidance. We would see this sell-off and this sell-down as an opportunity to enter the market. Of the different asset classes, equities, both globally and domestically, arguably offer the best opportunity. Don't overthink when to go in. Markets could still fall further, especially if economic news and company news is going to get worse before it gets better. But you want to move into markets, not all at one go, spread your investments over time, but you want to move. Yesterday we spoke about mistakes, and one of the big mistakes is the mistake of paralysis, doing nothing. To explain why, Albert Bridge Capital last year showed you what would happen to the investor who put $1,000 into the market over 30 years, or 2 investors. One investor chose the worst possible day to invest each year. The other investor chose the best possible day. The difference between these 2 outcomes was $120,000 and $150,000. Both numbers are a long way ahead of the investor who chose to do nothing. Make no mistake, 150,000 beats 120,000, but both numbers beat the decision to do nothing. We repeated that research for South Africa. We took an investor who put 1,000 Rand into the JSE. We gave them 30 years to do it. And then we made the investor either brilliant in their timing or appalling in their timing. The net result, the investor who got the worst possible day each year landed up with $800,000. The investor who got the best possible day each year landed up with $900,000. 900 beats 800, but both 900 and 800 are a long way ahead of the investor who does nothing. The news will get worse before it gets better, but don't let that news get in your way. Please keep sending, keep sharing, get invested, stay home, stay safe. See you tomorrow.